Hello there, this is fairbinaryoptions.com, and the name of this recording or analysis may sound a bit aggressive or strange, but bullish is when you're looking for price to move to the upside, and I would say this is just the situation that I'm looking for here. What you're seeing here is a classical impulsive move from my point of view, and this impulsive move starts right from the highs here, and it has a five-wave structure. Well, the first wave would be this one here, 1, 2, 3, 4, 5, and the first wave normally should end either here, okay, either here or here. So let's say that this is our first wave. Then we have a complex corrective form. The complex corrective form, it is being called a double three running, and that corrective form actually starts from here and ends all the way here, 1 and 2. So 1 and 2, the second wave there. Then the third wave to the downside in a clear impulsive move, basically in a free fall. And like in any impulsive move, at least one wave needs to be extended, but here the extension most likely goes with the third wave, and it needs to be more than 161.8 when compared with the first wave here. Well, if you take the first wave here and then you look at the outcome there, 161.8, and you take the outcome and you put it here like this, you are seeing that it fits exactly. Let me try to put it from here, okay, to here like this. Then it fits exactly into the second wave here. See, from here to here, and therefore it means that this is the third wave extension. Now, in a third wave extension, when you're looking at the market, then the fifth wave there should go and start after the fourth wave, of course, and the wave or the correction here for the first wave, for the fourth wave, I would say that it is a flat in the form of wave A here to the upside, then the B wave to the downside, then the C wave here, if you can see here, in the form of a small rising wedge, probably visible on the lower degree, but I'm not going on lower degrees than the 1 hour chart there. So the third wave there, I would say that the fourth wave will be this one here. And then this move to the downside, this terrible move to the downside, would be the fifth wave. 1, 2, 3, a consolidation here, the 4 and the fifth. So I would say that the fifth wave is coming here. 1, 2, 3, 4, 5. Well, if that is the fifth wave here, then it means that the whole structure 1, 2, 3, 4, 5, it ends here. So it starts from the highs here to the lows here. Now let's assume that this is not the end of the fifth wave. Well, if this is not the end of the fifth wave, it means that most likely the fourth wave is not completed. So this would not change the outcome of this analysis, in the sense that I would still like to buy call options, but the reason for avoiding, or in order to avoid the possibility for the fourth wave not to be done here, I will buy them option with end of week expiration date, only for that. But judging how price action looks like here, it may look like a triangle. It might be a triangle actually, so to be A, B, C, D, E, and this triangle to break lower for the fifth wave. This might be the case as well. But I will use that opportunity only to buy some more call options. Other than that, it is possible that this here to be completed. As you can see, it relates with the first wave, probably around with the 61.8. if you take this move from here to here, and then you take the 61.8 out of this move like this, and then you take the outcome and you put it here on the fourth wave here, it is almost 61.8, and this is encouraging for the bulls. So what to look for next? Well, in order for this to be an impulsive move that is completed, if price goes and breaks these highs here, in the 101.97. That means that the impulsive move is completed, and we will not see another move to the downside on the fifth wave. And therefore, I would like to buy call options by the time the fourth wave there is completed. So let's write on the screen that buying call options with end of week expiration date is our proposition here, or intention, and we'll have for that the 101.97. So by the time the 102 level will come, by the time the 102 level will come. Now, what is happening if the 102, let's say that this is a triangle, so it goes A, B, C, D, E. So let's say that this is a triangle that is breaking lower, and then that would be Monday, Tuesday, and on Wednesday price goes like this. Well, if price goes like this on Wednesday, no worries, you will still buy them, the call options with end of week expiration date. Even on Thursday, if this is happening on Thursday, we'll buy them end of week expiration date on Friday. Well, this is the plan on a simple impulsive move. From my point of view, if you're looking here at the previous move, this is an expanding triangle, A, B, C, D, E, with the E wave being most complex, and that means that a move that ends with an expanding triangle is a corrective one. So that has all the chances to be an impulsive move over, like a C wave over flat, and therefore this should be retraced completely. So I would be careful on the short side there. I would be careful on the put options there, but I really like the upside here. For the more aggressive traders, you can test your chances from these levels. For let's say the more conservative trader should wait for 1 or 2 level to come. Thank you very much for being here, guys, on fairbinaryoptions.com. We really enjoy your emails and questions. If you have, please send them. And all this is possible due to the help of our sponsor here, LionEye. So make sure you are checking lioneye.com, seeing the offers there, as that is one of the biggest brokers to trade binary options with. Thank you, and bye-bye.